page here with the case study, if you'd like to call it a treatment trial. This case study is trading just one strategy I call the intensive care strategy over 10 months in 2018. That was between January and November. This is only using one currency pair, the GBP versus the Japanese yen. So that's the price of the English pound against the Japanese yen. Because there's a lot of trade between Japan and UK, that means it's quite a fluid or volatile currency, and you want to see lots of movement in the pair. That's why I've chose that one. I'm using the 30-minute time frame. That means that each candle, each little line, represents 30 minutes. I found this is optimum for nurses because they're busy. You don't want to be looking at the charts all the time, trading a 5-minute candle. 30 minutes means you can go in there once a day, just look at the chart, see where you're at, back to work again. Each screen that you'll see is a week's worth of trading between Monday and Friday. Now, don't worry too much about terminology. I'm going to come out with some phrases like resistance and support and pips and this, that and the other. Don't worry too much about that. What I want you to get from this case study is the process and how little time you actually need to trade. Now watch it to the end. It's probably going to be about 45 minutes long, and you'll see how you could be making up to £106,580 in the next year. So let me just give you a little bit of information beforehand. Now the markets work off what's called a pip. It's a price interest point. That's how the markets move. They move up and down in pips. All right. We don't talk about profits in money, but we talk about pips, because everybody's account will be a different size and they'll use different lot sizes. Generally there's 3 lot sizes. There's a micro lot, which is 10 pence per pip. There's a mini lot, which is £1 per pip, and there's a standard lot, which is £10 per pip. Think of a lot of a dose of medication based on patient size. Say for example you're giving analgesia. You wouldn't give the same dosage to a 9-stone person you would to a 19-stone person. They can accommodate more analgesia because they've got bigger body mass. Yeah. Okay, so we'll start off with January week 1. Now what we're going to be doing is on the Japanese yen, 30-minute time frame using candles. Okay. This chart's, for the first time you've ever seen a price index chart, this is going to look confusing. But basically all these candles are 30 minutes and the price is either moving up or moving down, moving up, moving down, moving up, moving down. Now my strategy is when the price goes up, we monitor it, we put this red line on called a trend line. When the trend line is broken, we're then going to put a retracement on, a Fibonacci retracement. Again, don't worry too much about that, that'll all be covered in the course. And then we want to take profits in between these 2 levels down to 50%. What I found was majority of price action goes up and it comes down to at least 50%, if not more. This has obviously come down to 100%. Right, so the week started. I'm waiting for a good trend. Trend line goes up, I follow it. I'm not doing any trades yet. The trend breaks, I then put in an order here. All I'm saying to the broker is I want to sell when it gets to this level and I want to take profit when it gets to this level. Okay, price came up, went a little bit over the previous, but that's okay because we will have a stop loss in there. I'll cover stop losses in a while. Then we take profit. We then follow this trend down, breaks the trend line. We then put a sell order, a buy order in. So we buy at this level and we take profit there. I also put 2 trades in. I put one in that goes all the way up to the top of this price channel. Again, this might not sound, the terminology might not understand straight away, but bear with me, it'll come clear as we keep repeating this process. Now this first week, January, is a hard week, a hard month to trade because the banks have just come off holidays and businesses not quite sure what they're doing coming into the new year. So it's generally quite a hard month to trade. Now I actually lost 2 trades here because it came down, it hit where I was going to take the sell, but it came back up. It did the same here, and we lost on these trades. But overall, because of this trade and this long trade, we're actually 190 pips up. Right, on to week 2. Week 2 is a little bit easy to understand. As it came up here, we found that the price broke. So again, we put a sell order in here. It takes 2 minutes on the phone, and it automatically takes profit at this level. We put 2 trades in because we expect it to go further down. Then we just followed the trade down. So again, if this is a week, okay, this is Monday morning. Takes 10 minutes just to put that trade in. Leave it to run till maybe Wednesday, Tuesday, Wednesday. Taking the profit. Then we're just watching. Don't need to do anything. Just need to look at your phone maybe once a day to see when this price breaks. You can actually put an alert on this line through the platform that we use to tell you when the price is broken, so you can then look at your phone. So you don't need to be chasing it all the time. So then we put a sell order in here. It hasn't reached it. It hasn't reached it. Sorry, buy order. It triggers the buy order. We want to take profit here and here. So that was 130 pips, 220 pips over the week. Here again, well, that was last week. We actually didn't take a trade here because it didn't meet the criteria. But what I could have done is I could have taken this long trade. Again, this is a learning process. This is only like 2-3 weeks into January when I'm testing this system out. I could have taken this long trade where it was following the trend for 345 pips, but I didn't take it. That's the learning curve. This is what this whole case study is about, is a learning curve of how I learnt how to be successful in doing this. Okay, going on to week 4. Because of last week, seeing this continuation trend, I want to see, you know, is there a larger trend here going over 3 weeks? So that was the first week, second week, third week. There was a longer trade. So I thought, right, the fourth week, I'm going to put a longer trade in. So this is what we did here. This is the top of that channel. Price tends to move in channels. So when you reach the bottom of this channel, I put in a buy order and just let it run all the way up, and that was 220 pips. Then I'm looking for the retracement, move down, put in another sell order here. I left it over the weekend. Generally you wouldn't leave it over the weekend because you don't know what's going to happen over the weekend, but I did here. So I wake up Monday morning with 156 pips and I've done nothing really. So then we repeat this. Trend breaks, the retracement of a bigger time frame or bigger movement, we take the profit here. This one, the order didn't reach because we'd have put the order in here, but it didn't quite reach the order level, so no order was triggered. And this is the safety of my strategy: is you're going to lose a lot less trades because you don't even get into the trade because it doesn't reach the level. Now this is interesting. This is called a resistance zone, where the market goes up to a certain price and the market doesn't want whoever's buying the currency doesn't want to pay that much more money for it. So what you can expect then is the price to go down. So here I put in a sell order. I left this over the weekend. We'll see after this, but this is January. So January, even though it was a tough month, a lot of fluidity, it still was 1,021 pips, pretty good. So moving into February, this was the end of this other trade here. So there was 119 pips over the weekend. So again, that's nice to wake up on a Monday morning and have made profit. Continue on here with this resistance. We knew that price was going to, the market was going to struggle to sell above that price, so it tends to come down. So then we can put in a buy order here. Again, this is sort of maybe it's Tuesday. I put the buy order in. It takes 10 minutes just to put the order in. My level at 50% retracement, to take profit. But you also find here now, this is what's called a support zone, where it didn't want to pay any more there. Nobody was going to sell anymore at a lower price. So the market struggled all the way along this. I put this yellow bar in just so you're aware of what a support and resistance is. So the market kept trying to go down, or sellers were trying to go down. There's a little indication here that price is going to start to break through that support zone. Anyway, we've taken our profit for the week, and then we're just looking for next week. So we see this trend going down. It actually breaks the support zone. Now this is very interesting, because when you go back onto this one, this is the next week, what happens is support now becomes new resistance. So I know when it starts to come up to this new resistance, there's going to be a lot of pressure to push the price down. So what I start to do there is I start to stack trades, not just one trade, but a trade as it goes down. I could have just taken one trade here and taken the profit at the bottom, but I stacked the trades, which gave me a massive 753 pips. Now the market started to go a little bit flat, and the market does. 70% of the market's generally quite flat. As the end of the week there, this is the beginning of the week here, quite flat. Now what I want to explain to you is what makes the markets move. Things like trade with big companies abroad, or the news, a new interest rate, or this. Obviously we've got a lot of things going on with Brexit at the moment, and that's a good thing because it makes the market move. So if these news events hadn't have happened, probably this market would have continued to go flat. But what happened was these news events happened which moved the market, which gives us opportunity to trade. So these news events happened, we followed the trend up, the same intensive care strategy, wait for breaking trend, place a sell order in there, take profit there, and all the way down to the bottom. That was 156 pips for that week. And again, in the whole week, by just observing, the actual only work we actually did was 10 minutes here, putting this place in this order in. The rest of it's just observations. As nurses, we're doing that all the time on the wards, observations every hour, every 2 hours. Same thing with the market, you're just observing the market. Okay, here we're into back end of February. Actually lost here because we followed this trend down. We put the order in here, it just pipped over the order but then went the other way, so we actually lost 101 pips. That's not a problem because over the whole month we're well up. We're actually 1,121 pips up, and you're going to find that you're going to get losses, but it's about having a strategy that's, if you did 10 trades and 7 won, you're in profit. You know, it's as simple as that. You can actually do it where it's 50-50, you win 50, you lose 50, but the return ratio is greater. We'll go over that in a little bit of a while as well in the course. So here, moving on into March. March, the market's starting to pick up a little bit now. So even though we lost on that trade there, we got a double bottom here. We'll wait for the market to retrace. We put a buy order in here, taking profit at 50%, and the what's called a 0.618. Again, don't worry about the technicals, it's just ratios. So we took profit there, and then we stopped trades. The market was going a little bit flat in the first week of March. Again, flat, and we're just waiting. We start to see a little bit of a trend going up. We follow this trend up, put the trend line in, wait for the break in the trend, put the orders in to sell. Now, interesting here, this is called the RSI, Relative Strength Index. It's what the demand is, supply and demand really. So when this is over 70, it's saying that the market is oversold, meaning there's a high likelihood that the market's going to start to reverse and go down. This is one of the criteria for the intensive care strategy, which I'll be teaching in the course. So again, price goes up, oversold, put in the order. Actually, for some reason I didn't take this order. must have just missed it for some reason. The next price going up again, there was a poor risk to reward, so I didn't take that trade. Price went sideways again. We saw a good movement up again. Now we put into an order here. This is oversold. A sell order that goes down to the 50%, and we got 262 pips for the week. So actually, just by watching this, the only work I actually did technically is put an order in here, and that's still 262 pips. When you're new trading, you want to be trading all the time. It's actually the wrong thing to do. You need to be patient. We're nurses, and one of the things that struck me when I was having my epiphany about how nurses make good traders is that you hear a lot of traders say, just be patient, just be patient. Well, that's what we are as nurses, we're patient. Right, here, so Monday morning, nice big move up. We put a trend line in, breaks the trend. Now we've also got this resistance level here, and we've got what's called a double top, meaning that the market has tried twice to break through this level or sell at a higher level, and the market wouldn't sustain that. So this is a resistance level. Think of it of somebody's temperature. Actually no, antibiotics. If an antibiotic's becoming resistant, you need to try another treatment, or that's not working, the illness is going to get worse. So that's a resistance level. We took a little trade there, and we did the same trade there as a downward, because we expected the move to be downwards. 136 pips in that week. Again, just two trades. We're not trading all the time. As nurses, I know you're busy, so this is why I put this strategy up. So actually, you know, it's very, very minimal work, and the majority of the time, I mean, the joy of trading really is that while you're at work nursing, you're still earning money. That's where you're starting to get your extra bit of money, because it's not based on hourly way, an hourly time frame. It's passive. Okay, so that was March, 141 pips. Going into April, nice big move up. We took a little quick retracement here. We got stopped out here, so that was a loss of, I think, 40, 50. We took that trade, 40 pips, lost 30. So we were down 30 pips for that week. But again, it doesn't matter over the month. You're going to get these losses as long as it's greater over the week, over the month. Up into April, got a nice resistance level here. Learning from last week, because I missed the big trade, that the GBP is showing resistance, likely to have some good downtrends. So we took a trade here, and we took a trade here, 178 pips. Now, just we talk about candles in depth in the course, but this is a very interesting one. It's called an engulfing candle. It means it covers 2 or 3 of the other candles before. It's wiped out all the sellers. It means there's a good buying bias. So the market wants to go up. There's lots of sellers, lots of buyers there that want to buy that currency at that price. It's a retracement from a previous high. This high is this high here. So we know there's a retracement of, we can put a buy order in here and buy up to these higher limits. We've got a stop loss in here, so we don't get, you know, the market doesn't go too far and blow our accounts, which is always a risk, but we need to minimize that risk by putting a stop loss in there. It means that your trade will stop at that level. Now also, you know, you've got to understand, going through this process, I'm learning at the same time as I'm going through this and recording it for your benefit and seeing, you know, does this work? Up to now, we're in profit every month. I learned from another trader about moving averages. The average, the price always wants to come back to an average of a previous time. So we put 2 moving averages, the average of the last 8 bars and the average of the last 20 bars. and that suggests when the red line is on top that it's in an uptrend, when the blue line is on top that it's on a downtrend, so you can follow that trend as well. So for that month we had 683 total pips, and we had a few losses in there, so but still up over the month. Now going into May, I'm building on top of different bits of knowledge, different indicators, different strategies, different symptoms of the market. Now this is what's called divergence. It's when the price is going up but the demand is going down or flat. It's a good indication that there's going to be a reversal in the market. So we took this reversal here. Now Fibonacci extensions, I don't know if you know what Fibonacci is, but there's certain mathematical patterns that happen in nature, in maths, in nearly every science. It's these special ratios, and they go on extensions as well. So even though we took a profit here and here, we went for an extension down to an even lower level when markets are going further than the lowest low. But again, still you're going to get a reversal, so we took a reversal there, and with the intensive care strategy we did then an extension on the others. Let me just point out an indication that I use a lot, and it's part of the strategy again, is this overbought, oversold. So here it was oversold, and it ties in with this buy here. Here oversold ties in with this sell. Now some people would take it out here when there's this oversold part, but there's such a big market demand that I kept going with this. It became a level of resistance. Here again, another double bottom. We've also got a double top, and you see how the currencies work within these resistances. Here over 3 weeks, to see that the length of the trend, I took the trade on the second week here. So I'm not always trading every week, and that was 147 pips for week 3 of May. Here market's quite flat, and the forex market is quite flat a lot of the time. So all you're doing is monitoring these different currencies. Now when I talked before about risk to reward, why I might not take a trade, it's got to be at least 1-to-1. So if I'm risking this amount of pips, I need to have at least the same pips back, preferably into 1-to-2 or 1-to-3. So this was a good risk to reward. If I was risking £10, I'm going to make £30. So you do that all day long, wouldn't you? Risk £10 to make £30. It was actually a lot more than that, because there was 276 pips. So if that was either £1 per pip, or well, you can work it yourself out with the pips. What was interesting was why I stopped here was this engulfing candle. Again, it's just telling me that the market is oversold. It's time to get out. Again for May, that was 979 total pips. Now let me just introduce you to patterns. I spoke in the book or the report that we're looking at patterns all the time. This is what's called an ascending triangle. It means the market's going down, but it's slowly starting to run out of steam. So what tends to happen, sometimes you then get a run to try and push the price to see what the lowest low is, and this is where we get a double bottom. So we know that it's probably going to be a reversal here to the upside. So this is when we can now put in this Fibonacci retracement, put in a buy order here, and just let it run up to this point here. So this is Friday, 148 pips, and close the trade. Could have left it over the weekend. I don't like leaving them over the weekend because you don't know what's going to happen, and it's sort of starting to flatten out, so I left it. Now that continued to go up over the next week, and I didn't trade. I only need one trade a week, really, one good trade, so I'm just patient. It broke up here. We had divergence. See, the market price is going up, but the demand is going down in the same time frame, so it's a good place to buy. So I think it was probably Thursday afternoon, put in a sell order, went sideways a little bit and just dropped. So that was 104 pips. And like I said before, it's patience. You don't want to be trading all the time. A lot of new people will just be slaves to the screen. That's not what trading's about. Trading's about having a set of rules, following the process, and executing when the everything lines up, when it meets your rules. So that was the back end of that week. We then come up. Didn't take a trade there. Oh, yes, I did. Yeah, I took 2 trades. That was very early on a Monday morning, so I think I'd probably made these pips by 9-10 o'clock on a Monday morning. To be honest, I could have just left it then, because it had reached my plan of what I needed for a week. But it kept going, and then later on in the week I'm starting to see that it's starting to find some resistance at this level, this 148 handle. Now, handle just means a solid number, or these numbers down here are handles. The market tends to have problems moving past these solid numbers. Just something that the market does. It's more of a psychological thing, and the majority of trading is psychology. That's why nurses, I think, make very good traders, because they are very logical. They don't get stressed by loss. They know how to manage time and trades and risk. Basically, this is the whole idea of Forex for nurses. So I did take a trade here because I expected it to go down, which it did, and that was a total of 306 pips for the week. So in real terms, about 8 o'clock on a Monday morning, probably midday on Wednesday. Those are the only 2 times I actually did any work. The rest of the time just watching. We just need to be, what I want to teach you is looking for patterns. When you see the patterns, that you need to know how to react, what the treatment is for that pattern or that symptom of the market. So again, continuation down, seeing a nice long trend down here. I took some pips first thing again Monday morning, seeing a downtrend, or it was the reversal from the previous week. So we had this going up, or this longer term reversal. Breaks the trend, put in an order, take the profit, happy days. So now going into June, another reversal, take a little bit of profit, market starting to go down, breaks the trend, put in an order, take profit here, take profit here. For June, 1,115 pips. Great trade, or great month for trading. I don't know why, but I'm finding that in the summer months there's a lot more movement in the markets than around December, January time. So July, again, these are nice little short trades that you can do. So I did two trades in that week. Waiting for the trend to break, put in the order, take the profit, take the profit. Reversal, break the trend, order, profit, profit. 179 pips for the week. This was a good one. Stacking orders down again. Notice the RSI. Why I kept going with this, because the RSI was telling me that it was overbought, but there was so much momentum going downwards to this previous extension that I kept going. And the majority of the time it was in a downward trend. Even though it was oversold, there was a lot of pressure to keep going down. Market flat. Nothing you can do about this when the market's so flat. Even though you could take some little trades, the risk to reward's not good enough, so you wouldn't do that. So when the market's flat like that, don't worry, don't trade, go on holiday. So it continues to be a bit flat. Then I see this engulfing candle, big candle, lots of buyers coming into the market. It buys up. Again, I wait for it to break, put in the order here, take a profit. Because it's gone up so high, I'm expecting it to come down, crashing quite a lot. So instead of just stopping there, I actually put some more orders in with the Fibonacci extensions and took another 304 pips for that week as well. So that was July, 799 pips. Not bad. Market's starting to come down in August. It's quite flat. See a big move. So I'm expecting that to come back up, and it does, absolutely to the spot on this 50%. It's amazing when you see this retracement to 50%. It happens all the time. And then I continue down with an extension down to the lower levels. Again, 275 pips for that week. Now it's gone down quite hard. We're now starting to find a resistance level again at this solid numbers, 140. Double bottom, likely to go up. Doesn't go up a great deal, but it does go flat. It tried to get through this resistance but didn't. You had this engulfing bullish candle, sign of reversal trends, and it did. I mean, that's probably 50 pips. You could have taken that. At this time I've already done my 248 pips for the week, so I'm not in any hurry to take a trade if the risk's not there. If it doesn't follow my processes, I'm just not going to take a trade. I'm going to wait for a nice big uptrend. This happened. I probably actually no, this was a loss, didn't do what I wanted, so it lost 20 pips. Failed trade, 69 pips, and I just stopped trading for that week. Here, flat market again, just waiting for a good movement. It fit the criteria, it was overbought. The Fibonacci retracement was good, so I put trades in here and here. So that was 189 pips for that week. So all week, you know, I'm just maybe once a day for a few minutes just looking at the market. When I start to see these sort of things happen, then I'm interested. Might watch it, you know, a few more minutes, wait for this trend line to break. This is then Thursday afternoon. Put in the order, like I say, it takes a few minutes on your phone. Wait for the order to be filled and ended. And that was 189 pips for that week. So that was August. 643 pips, but I've probably only taken 7 trades or something. Okay, so again, you're seeing the same pattern here. Resistance, major resistance is this level. It doesn't want to go down, doesn't want to go down. This is telling me it's going to go back up, so I put the orders in. It does, it goes past the 50%, but that's where I've taken my profit. And that's it for me. 80 pips for the week, it's fine. I think I was on holiday that week actually. I mean, that's the joy of this type of passive income. As long as you've got an internet connection and a phone, you can trade from anywhere in the world. In fact, I'm sure of it. I'm sure I was in Cyprus at that time. Right, so market starts to go up. The reversal from the previous week. This movement here is now the reversal of this. So we put some orders in here for extensions. Here, if you remember back in March, I think, we talked about a descending triangle. Here, we've got an ascending triangle. These are all patterns, and I go into this into a lot of depth in the course. There's about 40 patterns, and they all do 80% of the time do the same thing, so you've got a good risk to reward of having a successful trade. This is a breakout opportunity where you've got this resistance level, the market's struggling for buyers to come in, it's running out of steam, then the buyers come in and boof, and that's where you could buy. I didn't on that occasion, I could have done. Here, engulfing candle, retracement and an extension, 49 pips, 191 pips. I think I missed a move here, missed 100 pips move, continuation from 50, yeah, because it went up again, but I didn't take that. I waited for it to come up to the top when we had divergence, and it expelled, you know, it had been oversold, there was divergence, there was lots of symptoms telling me that this market's going to crash down, and we took some pips there, took another 62 pips, so that was 302 pips for that week. So that's the crash down. See, what goes up must come down, and vice versa. So then there's a retracement of this, put an order in here, profit taken here, resistance here, likely to go down, sell order, take profit, 127 in that week, that's September. Again there, oversold. That was 796 pips for the week, for the month. Right, we're going into October now, same thing again, the retracement. I think there was a loss there, because it came, where my buy order is, it started to buy, but it actually went the other way. This massive big green candle here was probably some news. You're going to get news. There are strategies to trade around the news, I go through that in the course, but you just take this on the chin as a loss. The next one come. So then another move down. We then took a long trade here from probably Tuesday morning all the way up to Friday, and that was, well, it was 152 pips overall because we lost on that first trade, but we're still up, and that's what counts. Right here, quite a choppy week, but again, good movement down after this move up over the weekend. Take a trade there, take another trade, then on a reversal took another trade, nothing more. Then this is starting to set up for the next week. You might find that, you know, just looking at something on the Friday gives you an idea of what you could be looking at on the Monday morning, and that's what happened. So this continued down to go down on Monday morning. The same principle happens though, the retracement. We're just taking it from this level to this level, continue with the trade, reversal, sell trade now, nothing more. Good downward movement. The harder it goes down, it tends to bounce back harder as well. But so we took the trade there, and this is maybe a new setup for the next week, which it was. So Monday again, now we're going for it. There's been a good move upwards, so now we're going to put 3 orders in based off 100% level, 2 more extension levels, and that was a great week. October, we took 485 pips for that week. Now we think all I did on Monday afternoon, probably just 1-2 o'clock in the afternoon, took me 10-15 minutes just to place these 3 orders. Put these things on the chart, place these orders, 20 minutes tops, and just left it to do its thing. Off to work, off to playgroup, off to wherever. That's the joy of this sort of passive income, when you know while you're at work you're still earning extra money. I probably, let me think, 100, 400 pips, that was probably 50, that was over £1,000 week for me. And I think I was working, yeah I was working Thursday, Fridays at that time, so I didn't trade too much on the back end of the week. This is what led me again to the Forex for Nurses. If I can help you earn extra money, that's going to take the pressure off financially, give you more financial time, or more time to do the things you love, happy days. Right, so that was 1032 pips for the month. And you can see I'm sort of getting in the swing of things now. I've really learnt the lessons and added strategies onto strategies onto strategies to build a solid strategy that works consistently. There are going to be losses, that's just the nature of the beast. So on this one, another one trade, like the trade last week, or at the end of the month, that was just one trade. So the beginning of November, I just did one trade. I'm seeing again some good upward movement. There's been a big downward movement, there's going to be a big upward movement. So again, I put in the reverse of the previous week's trade, and that was another 621 pips. I'm sort of going out on a high here really by the end of the year, but I know I'm going to stop at the end of November because I then want to put all this information together for you really. So that was the end of that week, but I'm also, whilst I'm doing this, I'm just watching the trend going up, planning the next trend or the next trade. It kept going up, there was no signs of it reversing, so I kept with that. So I started to stack some trades going up until I found that it was going to be oversold again. I went with the trend, so it says here no IC conditions, that was no intensive care conditions, strong trend continuation, going with the flow, and you put a trailing stop loss on there. Trailing stop loss is a risk protection strategy. Again, I'll go through that in the course. In fact, I actually give you some software that will do that automatically, meaning that you might put a stop loss here, then when it goes up here, the stop loss moves, and it moves with your trade. So even if it reverses, you're locking in profit automatically. It's brilliant. Right, so we had a little double top here telling me it's going to reverse. We took another trade there and watching the trade as it moves down. It did, it continued over the weekend into the next day, found levels of support. We did our intensive care strategy, put the Fibonacci's on, bought there, sold there, reversal, past the trend line, sold all the way down to the 100%, because we know that this is a good strong level of support, that it's likely to want to go all the way down there at least. It actually broke through there, that's fine, at least we took our profit out. The market goes flat then into the last week of November. Like I say, I don't know why, but it tends to tailor off the back end of November into December. I think the markets are just not as active. Trade's not as active. There's a little bit of a upward movement here. This looks to me a bit like a news event, but what goes up must come down, so it was a good opportunity to sell. I think that was the last trade of the month. No, there's another little trade here. Again, resistance, double top. We took two trades on the same retracement really, because this had gone up, broken the trend line, put the Fibonacci on, down to 50%, came back up, touched this support line, going to do the same thing again, come back down. So we take the trend there, just 69 pips on that one. But again, both these things just to prove this oversold, resistance. These are all the indicators. You know, like when you're doing observations, looking at a patient, you're going to take the blood pressure, their pulse, looking at pallor, observations. These are all indicators of the market, the same sort of thing. This is why I think nurses make very good traders. They've already got that inbuilt into them to be looking for symptoms or a build-up of symptoms that gives you a good indication if people are getting better or people are getting worse. This is going to tell you a similar way where the market's going. Okay, so that's your 10 months of trading. So to bring that all together, we talked about the lot sizes. In November there was 1,328 pips, and that was only, I think, 5 or 6 trades. But we're looking at the bigger time frame, so that's very interesting. For the total of the 10 months, that was 10,658 pips. looking at these lot sizes, so that could have been, even if we were just using lot sizes of 10 pence per pip, that would have been £1,658. Well, that's a nice holiday for you at the end of Christmas, or pays for your Christmas if you like. If you were doing mini lots, the profit would have been £10,658. So that's, I don't know, a nice new car possibly. If you did standard lots, which is your £10 per pip, that would have been a massive £106,580. Now that's life-changing to anybody. But that's actually all doing the same trades, but with just different lot sizes. That's using proper risk management. You would only risk 1 to 2, possibly 3% of your capital. So to be able to trade this, you'd need quite a lot of capital, but still very doable. Basically what you do is you just build your capital up over the months, and that's called compounding, like compounding interest. It's going to be far better than what's in your bank and what the bank can do for you. Right, well that's it from me. I'm going to thank you for your time. Please ask any questions in the description box below. I'll be lovely and happy to answer all your questions. I'm as passionate about this as I've been passionate about helping people through occupational health. And to be honest, I don't think it's a million miles away, because I'm still helping people balance life and work and financial and time constraints. If this can just help you take a little bit of the financial pressure off, or the time pressure off, or stresses at home, or you're off sick, or you want to pay for a student loan, or just want a better